Welcome to the Daily Update, where I'll go over the action in the market for Tuesday, December 2nd, and we'll see how things look for Wednesday, December 3rd. All right, sleepy day, non-trending day. We're still not trending as far as our ADX trend indicator is concerned, although we are positive on all three time frames. And originally, I thought there was supposed to be the ADP employment change report came out. It's on the calendar, but that didn't come out, so we didn't have any economic data that came out. So, kind of a sleepy day, didn't see a real big range between the high and the low, and we ended up being slightly positive, but we're kind of not really going anywhere right now. We saw a bit of an improvement with growth, but at the same time, in the bigger picture, in the short term anyway, growth is not outperforming. But there's some improvements that came in Tuesday's session that I'll go through. Now, before I get into the video, from now until the end of 2025, I have a program called the SPX Investing Program. It's free. All you need is an email address. Check that out. Here's the link right here on the slide. It's also right below the video if you're watching this on YouTube or Rumble, and see if it will benefit you. Okay, so let's go back and talk about what happened. We did have a higher open. The futures were positive there. We opened at R1, 68.38. And then we climbed from there, but we hit resistance at 68.50, another round number. That set the intraday high. We didn't end up going any higher than that. Then we declined back down below R1. We got below the daily pivot, 68.19, and we found support at the unchanged level and kind of dipped around there a little bit. And when we have these pivot points that are set up for each day, a built-in pivot point is the unchanged level. And since we were up, it acted as support. Then we chopped between the unchanged level to the downside and R1 to the upside, closing slightly below R1. So not an awful lot of conviction as far as price action. We were up 0.25% below average with volume there. Positive in the short, intermediate, and long term. We're still above moving averages. We did see interest rates come down just slightly with the 10-year yield, and that doesn't seem to be a real problem for the market right now, but we always want to keep an eye on that anyway. And of course, lots of geopolitical things happening, just not really anything that's impacting the market directly. So some comments. Bitcoin is attempting to rebound. Now, I usually don't talk about Bitcoin. I don't talk about cryptocurrencies in these videos or in the program that I have. But what I've noticed over the last number of years is there's a pretty strong correlation between Bitcoin and the Nasdaq 100, and the stocks that are in the Nasdaq 100 are also in the S&P 500. So we look at the correlation between the two markets, and it's not as strong as a correlation as it was a week or so ago, but it's still something that we want to keep an eye on. And Bitcoin was really falling there, and it's trying to bounce back up from those levels. All right. And then tech and mega caps did have a pretty good day on Tuesday, but growth is still underperforming value. I'll show you all the charts for this. The market's still very optimistic about a rate cut happening. This will be next week when the Fed makes their announcement on the 10th. And we still have a confirmed Hindenburg-Ullman. That's negative, and that's it first triggered in October. Then we've seen confirmation spikes since then. It's still in the background. We'll see if that ends up developing into anything. And yes, of course, that is quite negative. But then on the positive side, we have until this Friday to see if we get a confirmed ZWAG NYC breadth thrust. And that's quite a positive thing as well. We're just kind of waiting to see how this plays out. Now, we're still seeing fairly good short-term momentum here with the Stoch RSI, Williams percent R, and Stochastics. Not really strong positive conviction, but leaning more in that direction. And we still have the CMB composite, which is looking extreme. It's been up there for 3 days now. Usually it doesn't last all that long, but it's been kind of hanging out in extreme positive territory. And no change to the overall scenario here that the Fed is anticipating, as the market is, that we'll have a soft landing, meaning no recession. And after coming out and saying there may not be a rate cut in December, now some folks on the Fed were coming out and saying, well, we would be open to that. It's not a done deal, but the market is pretty much every day now treating that as though the rate cut in December is a done deal. Then the dollar was down slightly. We have been having trouble with the dollar getting back above 100. Now we're in uptrends with the dollar when we look at the British pound and the Japanese yen, which kind of shows you how weak those other currencies are. If the dollar's going down and we're still in an uptrend, but we see this quite often, especially with currencies, that when we see a moving average crossover, it's very common to see price go in the opposite direction of the crossover. And it's like, okay, we had a positive crossover and now we're going down. It just seems to happen. Not just with currencies, although I've noticed it a little bit more there. It can happen with different sectors and even indexes that we follow. And we're down at 4.09% with the 10-year yield. So we dropped down a little bit there. We're still extreme negative on the daily sentiment gauge. Now, I showed this in yesterday's video. You look at some of the bigger picture sentiment gauges, and it has us as being positive, if not even a little bit extreme positive there. Okay, well, this is more what's happening day by day, and this updates multiple times throughout the trading day. We're coming in at 24. We're still under that 25 level. Now, this could actually help the market because we're already extreme negative, and we have been improving since when we were bouncing up last week after it had gone all the way down to about 6. So we're not really seeing much of a change there, at least yet. You still have a lot of folks that are rather apprehensive about what's going on. And we're not trending still, both in the short and intermediate term, although we are positive. The green line is above the red line. And with the slight update, we're positive with the bias and momentum. I'm still keeping as mixed to positive. The reason why we're mixed is we're still seeing growth really underperforming value. And that's a bit of a concern that we're just not seeing much of an improvement in, at least right now. Okay, so we didn't have any economic reports, even though the calendar said there was supposed to be something here. We're going to get that ADP report in Wednesday session. All right, so this is an overbought, oversold composite. Now, there's a couple of ways you can interpret this chart. We're still coming in positive at 83.99. All right, that's still a pretty high reading. Now, we were coming down a bit here as the market was going down, and this is holding up fairly well. So that's the positive side. Now, when this turns red, that means that we're getting a little extreme here as well. Now, I look at different ways of measuring overbought and oversold. This is just one, and it's a bigger picture look here. So you could take it as positive because we're coming in with a high reading. You could take this as somewhat negative because we're looking extreme positive. All right, and then we did get the ISM manufacturing earlier on, where the purple line, that's the S&P, which has been going down. We're also going down, and we're below 50 with the manufacturing index, and that's showing contraction in the U.S. economy. And then the market cap and earnings, we get this chart quite often here of the 10 largest companies. So 41% of the market cap is in 10% of the companies and 31% of the earnings. And that's pretty much what we've been seeing lately. Then, yes, we're overvalued, no matter how you look at it. And whether we look at it just on a static scale of a 10, 15, 20 point PE ratio, or if we compare it to other countries across the world, we're still coming in at 22.7 with the US. And that's forward-looking PE ratios. And gold longs are rising. This is showing that the cumulative sum of open interest here. And you got a lot of people that are still interested in gold. Now, it hasn't been really roaring to the upside like it was earlier on, but you still have a lot of interest in gold in and of itself. And asset class flows, still seeing most money going into stocks. That's equities right here. Then fixed income, that's bonds. And then other, that could be like money markets and things like that. All right. And then the monthly gains tracker, months in a row that have been positive. Okay. We're up 7 months looking here. And tell that to last spring. I mean, my goodness, we were just going down hard and heavy, and we were trying to get a bit of a bounce there, and people were like, "Oh, are we going to make a new all-time high?" And it's like, no, how can the world can we even consider that? Well, once the dust settled and the news wasn't as bad as was initially reported, then we started to come up out of that, and the market's been pretty strong since then. Then the Red Book. This is a measurement of retail sales, and it surged by 7.9, excuse me, 7.6% year over year, ending November 29th. Okay, so we're kind of range bound here, but it is coming up. And other reports that I've seen show that like Black Friday and Cyber Monday, the sales have been pretty good. All right, and then this is post-COVID inflation. Just looking how inflation really went up, and then now it's how it's starting to kind of, it has been coming back down here, not only within the U.S. but globally. And then this is the average year-over-year core CPI inflation going 2016 and then comparing it to 2024. All right. And we're still up there as far as inflation. Because even though inflation's been coming down, there's still the previous inflation that's part of the overall equation. And then central banks and gold, we're still seeing central banks coming in and buying an awful lot of gold right now. And then weekly ETF flows. We're actually seeing money coming out of consumer cyclicals. These tend to go up and down with the economy. But a lot of money going in across the board. Some money here coming out of government bonds. But we're still seeing a lot of money going in on a global basis, a lot into the small caps right now. Folks are hoping that maybe there'll be some favor there. But these are just different asset classes and a measure of what money's going in versus what money's coming out. And then Staples Insiders, they're really doing a lot of buying right now. Well, I hesitate to tout the boring consumer staples. This is toilet paper and toothpaste. And this is part of the issue that we've been seeing with growth versus value. And where value, which is consumer staples, that has been holding up quite well. And we do some direct ratios between discretionary, like Amazon, Tesla, and then other things like toilet paper and toothpaste, and we're seeing a lot of interest here. But industry insiders have no such qualms. These are folks in these industries, and they're doing an awful lot of buying right now. This is put out by sentimenttrader.com, which is a really, really good website for some very unique studies about things. All right, so kind of a boring day overall. We started out at R1. We hit the top right here at about 868.50, came back down to the daily pivot. We came down to the unchanged level a couple of times. Then we drifted up back up to R1 and then ended up closing down slightly below R1. So not a lot of conviction there. And very similar to what we saw on Monday. Now this could pick up as some of these economic reports start coming out throughout the rest of the week. And not much of a change in the initial overnight session here. Not a lot of conviction. We were drifting up higher before the market opened on Tuesday, and then here's the choppiness that happened while the market was open. And still seeing the red line above the blue line here. Now, that's not negative in and of itself. It's holding up for right now. So this chart isn't that scary. We would like to see the blue line above the red line. That means growth is outperforming value, but they're both holding up fairly well currently. This is where we're a little bit more concerned with the intraday growth to value chart 10 minutes for the S&P, not showing an awful lot of conviction. And even in Tuesday's up day, didn't really see all that much of an improvement here. So end of day, but was up more and value was virtually unchanged, but slightly positive. Growth was up less for the mid caps and it was down for the small caps. So we are seeing a little bit of an improvement when we measure it this way, the growth to value ratio for the small caps. That's still holding up fairly well, but the mid caps are not. Now they are bouncing back up a little bit here, but they've been showing a lot of weakness and not really seeing much improvement here. This is another concern. This is why I see the market is still getting more defensive. The growth to value ratio for the S&P is still below both of the moving averages. And a little bit of an improvement, but still inside the rainbow with this growth to value ratio. And discretionary to staples, not really changing all that much. Now, we were down a little bit here with staples, but we were also down a bit with discretionary. So the overall ratio is still below its 50-day moving average. And we're not trending. We're below the moving average here in the short term. We're still positive with the green line above the red line. Also positive in the intermediate term, but flat below the moving average here with the intermediate term. And this is what I base things around for the strategies that I implement. What's the intermediate term doing? We watch the short term because a lot of times that leads into the intermediate term, and then the intermediate term is kind of the foundation of the decision making that I do and the analysis that I do. And then we are still below average with volume here. We picked up a little bit from Monday's session, but it's still below average overall. Now, we're looking good here with the gamma exposure. This is all green. We closed around the 68.29 level, so we're getting a little bit closer to that 68.50 level. And that's where some overhead resistance could be. We see the column here intersecting with the blue line. We're not quite there yet at 6,900, but if we continue to go up, this will probably become another area of resistance. And if we start to fall, we're seeing some at the 68, was that 68.30 level, but a little bit more support here at the 6,800 level. All right, and still getting a high reading with the ulcer index. This shows fear is high according to this in our gauge here. And we're still below 20, and we tick down just a little bit with the VIX, with the line chart and the bar chart, dropping down a little bit here with the volatility of the VIX itself, and that's what we typically see on positive days. And we ticked up just a little bit here with this fear gauge, and we are going up with this other fear gauge. So some of the fears coming back into the market, even though it was an up day on a closing basis. And we dropped down a little bit here with the daily equity put call ratio chart. And we're continuing to go down here with the 5-day chart, which is more positive. When this is going up, that's more negative. When this is declining, that is seen as more positive. And we're rolling over a little bit with the 10-day chart. This didn't update for a couple of days, but now it finally updated here. We were really starting to go up as the market was going down, and now we could be beginning to roll over, which is seen as an improvement from an equity put call ratio basis. And we're still going up here with the risk on to risk off ratio. That's positive. And in the bigger picture, it's been positive. It just was looking more negative as we were pulling back when markets were going down. And we're also improving here with the high beta to low beta ratio. In the bigger picture, this is still looking pretty good. So nothing's really falling apart here. We're just not seeing growth outperforming value and taking a real leadership role like we usually see. And not really seeing much fear here. We came up just a little bit, but we're still below the band when we look at volatility risk premium. And coming down a little bit, but still off of recent all-time highs with the advanced decline line based on price. We didn't set an all-time high based on volume, but this is still holding up quite well. We declined, but we're still above zero with the advanced decline ratio, both short and intermediate term. And we're still going up with the advanced decline oscillator. That's positive. And even over a little longer period of time to see this going up, that means more stocks in the S&P are advancing than are declining. And we're still looking okay here. Now we are witnessing a bit of a drop off here with the new highs, a little bit of an expansion with the new lows. But when we look at the 5-day chart and the 10-day chart, they continue to go up. And we're showing a little bit of weakness here, but still positive with accumulation distribution still above the moving average, longer term. And we're just a little bit above the moving average shorter term with this indicator. So this is still positive. And we came down a little bit with the histogram, but the red line is still going up. So smart money indicator number 2 is positive, but we're turning negative now with the Chaikin oscillator. It declined after Monday, it declined after Tuesday, and now it's starting to drop below the moving average. So we're not seeing all three positive. One of them, this one, the Chaikin oscillator, is now negative. And we've turned back to negative with the vortex. It's hard to see, but the red line's above the green line. The green line has a reading of 0.94. The red line has a reading of 0.95. So this has now gone back to negative. And not really seeing a lot of strength here, but we're still above the moving average with our advanced decline line studies across all the indexes that we follow. And coming down a little bit more, but still well above 50 with those stocks above their 20-day moving averages in the S&P. A decline with the 50-period moving average study, 100 moving average study, and 200 moving average study. So not a really strong day from that aspect. So we did have an update though on a closing basis here, and so we were going up. We're trying to break this very short-term trend line here of these lower highs and lower lows. If we can continue to break out to the upside, that would help negate that. We're still above the 50-day moving average, so we're positive in the intermediate term, but we continue to be below average with volume. So a bit of a decline here with the 20, 50, and 200-day moving average study. Still looking extreme positive. This shows positive short-term conviction here with the Stochastic RSI and the Williams percent R, but we don't have our CCI charts extreme yet. Here's the CCI 14 and the CCI 20. And stochastics, since we had the slight update, we're back to showing very short-term momentum with the stochastics. We're extreme with the intermediate short term, above the midpoint, and going up with the long short-term stochastic. And still positive with the force index. And still above these three shorter term moving averages, the 10, 20, and 30, and the lines are starting to go back up. That's positive from a trend perspective. Short-term trend based on 20 periods above both of the lines. The green line and the blue line are going up. And we are 0.89% away from the all-time high on a closing basis. So we're not that far away, really, less than 1%. And we're right on the border between the +1 and +2 channel with the standard deviations chart. Now, even with the update, we're seeing the balance of power showing some weakness here, but it's still above zero. This is the one that's still extreme positive. The CMB composite, it's kind of flatlining above this black line. And we're looking a little bit more negative now. The go no go was trying to turn more positive here. And no, I guess the dark blue, I get mixed up with these colors. The dark blue is actually turning a little bit more positive. So instead of negative, it's looking more positive. We're still above the midpoint, but not showing a lot of conviction with the highest high, lowest low value chart. We're still going up with the TTM squeeze. This is another momentum oscillator that is continuing to improve. We're still below zero, though, with the ease of movement. And we're still showing pretty hefty short-term movement over the last 10 periods. If we start to chop sideways for a little while, this reading is probably going to come down a lot. It's just measuring movement, not necessarily direction. Still looking more negative here with the Arun, where the oscillator's below zero and kind of flatlining, looking more negative, showing more sellers than buyers. And we are coming down, but still above zero with the S&P McClellan oscillator. So we're still going up with the summation index based on price and volume. Declining, but still above zero with the NYSE McClellan oscillator. So we're still going up with the summation index based on price and volume for the NYSE. Now, it was mixed after Monday where we started to turn down based on price. We were still going up based on volume. Now we're starting to decline based on price and volume. So the swell trading oscillator is picking up some negative action now. But we are improving with momentum. The PMO is crossing above its moving average. We're above the moving average and advancing based on price and volume. And coming down a little bit, but still below 50 with the PMOs that are rising. But this is weakening a bit after being extreme positive. We're still above 50 and going up with the buy signals, and we're still going up with the PMOs that are above zero. Still positive with the parabolic SAR, positive with the Elder's impulse system, positive with the short-term momentum oscillator, positive with the short to somewhat intermediate term oscillator, the MACD. And so we are turning more positive here from a momentum perspective, short and intermediate term, trying to turn up and not quite positive with the two long-term oscillators, but we're positive with the Copic curve momentum oscillator. And we're back up into this little darker green area, showing an improvement with the Sean trend meter, but we're still below 50 with the money flow, and still above 50 and going up with the ultimate oscillator, still positive with on balance volume, and we continue to go up with the bullish percent index. And so that's positive. We're above the moving average, we're above 50. We're also continuing to go up with the NYSE bullish percent index and the NASDAQ 100 bullish percent index. Still above 50 with the intermediate and short-term RSI, and still hanging out a little bit above both lines with the intermediate term trend based on 50 periods. The blue line and the red line are trying to go back up, and we're above all the moving averages here. So that's why we're positive in the short, intermediate, and long term. But we're still just a little bit above this 10% level when we measure the distance away from the 200-day simple moving average. But we spent quite a bit of time above this. But we just want to keep an eye on this because if things do turn and start to go down, we tend to see more substantial declines when they typically start above this 10% level. Still looking okay here with the weekly chart of the S&P. We're below this pivot point, but still above this other longer term pivot point. And now you can see we're even seeing some of the pivot points coming into play for 2026. All right, and then we're still positive from a trend basis here with the hike in ASHI. We're positive with the Kagi chart, the Renko chart, and the three-line break chart. So that part is positive. Long term, we did see a bit of a decrease here with the 150 and 200-day moving average study. And this is what we're waiting to see will happen, which if it doesn't happen, it still is could be somewhat positive. When we were really went down on November 20th, we got an extreme negative reading. And now what we need to see after we come up out of that by December 5th, which is Friday, we need to get up to this red line. That would be an official ZWAG NYC breadth thrust. Now, even if we don't get all the way up there, it could still be positive for the market. But look at the one that we saw coming out of the April lows here, and then see what the S&P did after that. And you can see what the S&P did after we saw previous recent ZWAG NYC breadth thrusts. This just shows that we're near here and then what the returns are going forward compared to what the market usually does. And this also says that we're close, but not quite. And even when we get close, the returns looking forward are still quite positive. All right, we're still positive on all three time frames with all the different indexes, still negative with the short term based on bonds and the dollar. And we had tech and communication. These were the three areas, and these are growth. Industrials also were up fairly good. We had discretionary down a little bit. Seeing a bit of profit taking here with energy and staples were also down as well as healthcare. And so we started off looking a little bit more positive. We had a bullish MACD crossover with the tech sector. That's growth. That's positive. Then we got above 23.3, 23.4, 23.5 with the NASDAQ. Canada pulled back a little bit here. And then we had a tech sector BPI cross above 50. So we like this. The bullish MACD crossover, the BPI cross above 50, that's growth, that's tech. If this can improve and hold on to these gains, that would be quite positive for the market. We just need to see more follow through. And then the utilities had a BPI cross below 80. They had been a little bit stronger lately, not really coming out of a range that they've been in, but seeing a little bit of weakness there. And so when you see Nvidia, Apple, and Microsoft up, not by very much, that helped the tech sector, where Broadcom was down, Oracle was down just a little bit here. Not much of a change with Google. Meta was up just a little bit. Amazon was up a little bit. Tesla was down a little bit. You can see pretty small gains or losses compared to what we usually see. Still seeing a little bit more profit taking. And you kind of have to watch this because we look at the healthcare charts all the time and they've been underperforming, but then they started to improve and healthcare was doing good in November. And now when people that don't really follow the market as close, they're getting wind of this. And so they're starting to jump in and it's like, okay, a lot of times they end up jumping in right when the party's about over. So be careful if you're actually looking to ride the healthcare wave. It could still bounce. I mean, it had such a good month to see it going down now is not really a surprise since folks want to lock in some profits. So, not much of a move here, but still above this pivot point for December with the Dow and above its 50-day moving average, positive with the Elder's Impulse system, and still above this pivot point here, still for November, and above the pivot point for December. So, just holding up okay right now with the NASDAQ, still positive with the Elder's Impulse system, breaking out a little bit above this November pivot point and also above the December pivot point for the NASDAQ 100, still positive with the Elder's Impulse system. Momentum for the NASDAQ 100. We're seeing a little bit more follow through with positive momentum there. And just kind of at the high end of the range that we've seen lately here with the S&P 600 small caps and just kind of coming down. We were actually down a little bit here with the Russell 2000 small caps, but still above their 50-day moving average and neutral now after being positive with the Elder's Impulse system for the small caps. A bit of a decline here, still above their 50-day moving average, still above the December pivot here with the mid caps. And they've also switched from being positive over to neutral with the Elder's Impulse system, still above the 50-day moving average with the Wilshire 5000 and the total US stock ETF, still above the 50-day moving average with the FANG index, the really big stocks here. So Apple was up over 1%, setting another new all-time high. That's looking pretty good now. Coming further above its 50-day moving average with Amazon, bouncing off of its 200-day moving average with Microsoft, and coming down and seeing some profit taking, but going back up a little bit on Tuesday with Google. And stock's been looking a little stronger there. And then Meta was up almost 1%. We're in danger of seeing a death cross here if we stay below both of these moving averages. But Meta's trying to make a bit of a bounce here after it saw some pretty significant weakness. And then Nvidia was up, but not even back up to its 50-day moving average. Tesla was down just slightly, a little bit below its 50-day moving average. And Netflix, we're just getting really close to a death cross here, where this had been quite positive for a number of years, going back to late 2022. This could be the first death cross that we've seen since then. And the Dow Jones Semiconductor Index, we're still above the 50-day moving average. And we like this. This is positive for the market. When the semiconductors do well, and the SMH semiconductor ETF, it was up 1.83%. And so that's looking pretty solid there. And then we measure on a weekly chart how far we are from the 200-day moving average with the Dow Jones Semiconductor Index. We are overextended. And this is just where we want to keep an eye on this because when we get above this level, just like with the daily chart of the S&P, this is where we can often see more significant pullbacks. And this is still looking really good here. The semi to tech ratio. Now, tech was up, but semis were up even more. And this is what we like to see in a more positive environment. So that is actually looking better. And we're coming down a little bit here with the staples to tech ratio, where the bigger picture was that we were declining, then stocks were under pressure. This started to go back up. Now it's starting to come back down, but it hasn't dropped below its 50-day moving average, at least yet. Then this is the correlation between Bitcoin, which is trying to bounce, and the NASDAQ 100. You can see when we get down about to this 0.25 area, we're bouncing up a little bit now because they were both up on Tuesday. But 0.25 to the upside, minus 0.25 to the downside, that's when I consider it to be neutral, a neutral correlation. But when we're above this area, they're having a tendency to go in the same direction at the same time, whether up or down. And we were down with oil, getting into the 58 range now, still below 100 with the dollar index daily chart. And we did tick down just a little bit here with the 10-year yield, but this hasn't really been a major deal for the stock market. Now, if we go all the way back up to 4.5%, yeah, that's going to be a big deal here. And we're still looking okay here with the 10-year based on price. We are improving a little bit here with the Qs to S&P. We crossed above the moving average. We're a little bit above the moving average with discretionary to the S&P, and we're still underneath the moving average, and the moving average is declining when we compare large cap growth to value. So we're still below the moving average with the large caps, mid caps, and we're still above the moving average with the small caps. And then we have the Hindenburg Omen here. Not an additional spike. These are just, it's just showing us on a day by day basis how this is playing out here. The initial spike was on October 10th, and then we had the confirmation spikes after that that were at the end of October and into November. And you can see other times when we saw a series of spikes, that usually didn't bode well for the market. Now, this doesn't make it a done deal unless you're a perma bear, excuse me. They have it done, finished, over, declare it. I mean, they declare these things even when we see single spikes. So we'll have to see how things come out on that one. But again, we potentially have that Zwag NYC breadth thrust, which is quite positive. All right, so we're still positive on all three time frames. And now we're going to start to get some economic reports. The MBA Mortgage Applications Index, the Global Services PMI, and the ADP Employment Change, Import, Export, Industrial Production, ISM Services. And I think the JOLTS job openings is going to come out. And we're still a little mixed up with these things. And then anything geopolitical. Of course, there's a lot of news coming out with Venezuela. There's things of course, happening between Russia, Ukraine, and things in the Middle East, but not really having an impact on the market. And then we'll see, kind of a long list here for Wednesday and then Thursday and Friday. So now we're going to start to get inundated with some pretty important economic data, and that might help show the conviction of the market, either up or down. And see here on this calendar where Jolts, it was supposed to come out on Tuesday. It was a no-show, AWOL there. And then here's the list for Wednesday, Thursday, and Friday. Seasonally, we're neutral to positive with the Dow. where we're neutral to negative with the S&P, but quite positive with the Nasdaq. When we look at December 3rd, going all the way back to 2002. And we see a little bit of positive seasonality moving out here. It's usually later in December when things start to pick up and look a little bit better. Christmas, all the Christmas cheer and everything that everybody has. And here's the first half of December, which does okay, but it's the second half that tends to perform better. This also shows going back to 1950 what the statistics are like for December, and they're pretty good. And then this is another newer chart. Santa comes later in December, where that's typically where we see better performance after we get beyond the middle part of December. And then December's rarely down 2 years in a row. Now, a year ago, we were down in 2024, and we had a monster year. It's just December ended up not being all that good. And so, what they're trying to think here is okay, we had a down 2024 December. Does that mean we're less likely to have a down 2025 December? And this also is showing the positive seasonality, as we're also seeing with this chart and this other chart here going back to 1928. And then the cycle composite chart also showing positive seasonality going into the end of the year. So you can have a lot of support historically. We just need the market to follow what historically has already happened. And okay, so the warning signs, we're still worried about the short-term growth to value and discretionary to staples ratios. They are negative. The ease of movement is continuing to be negative, as is the swollen trading oscillator. It went from mixed to negative, and the money flow is below 50 and declining. That's negative there, and we have a confirmed Hindenburg omen. And on the positive side, now we're not getting three positive signals with our smart money indicators. It's the Chaikin oscillator that's now dropping below its moving average. Longer term, we're still hanging on to uptrends. When we look at growth to value and discretionary to staples, we're positive with the S&P and NYC McClellan oscillator. Even though they've been declining, they're still above zero. And that means that the summation indexes are going up. And our momentum is improving. That continues to look a little bit better there. The parabolic SAR is positive. The bullish percent indexes continue to climb for the S&P, NYSE, and NASDAQ 100. That's positive. Oops, this should be on the negative side. Oopsie daisy. That's the vortex is now turned negative, and the ultimate oscillator is still positive, as is the momentum for the NASDAQ 100. And we just keep watching the financial sector underperform, going all the way back to last spring. Our longer term special K chart, both the daily and weekly chart, continue to be positive. And then here are the pivot points. I hope you rely on these. They're really quite useful. And I post them on the YouTube community tab. I also have them on the website as well. Okay, so our conclusion, no change overall. In the short term, we are positive and the momentum it's improving. It's still hanging on to being more positive, but we're not trending. And the same thing is true with the intermediate term, positive but not trending. Long term, we're positive, but we're more than 10% above the 200-day simple moving average. Thank you. I hope you have a wonderful day, and I will talk to you in the next video.